Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Shane Melanson. Thanks for being on the show, Shane.
Yeah, I'm excited to be here, Whitney.
Yeah, I'm excited to have you. And before I tell you more about Shane, I want to remind you to go to the Real Estate Syndication Show Facebook group where you can ask questions of experts like Shane and leave questions for me to ask upcoming guests as well. And then also just network and grow your business and learn from others who are ahead of you. So get connected there. Also go to Life Bridge Capital where you can connect with me. And then a little more about Shane. He's known as the arbitrage architect, where he helps high-income earners convert their income to net worth. Is a commercial developer in Calgary, Canada, having completed more than $65 million in real estate projects and helping his clients buy and sell more than $250 million worth of commercial real estate. Shane has invested in projects across Canada and the Southwest U.S. Works from home, spending time with his wife, Kelly, and taking his 3 kids to school most days. That's the entrepreneur's dream right there, right? So, most recent book, you have to look it up, Club Syndication, How the Wealthy Raise Capital and Invest in Commercial Real Estate. And he's also happy to give out a PDF copy for free if you go to clubsyndication.com, which I encourage you to do that. So, Shane, thank you again for your time on the show, providing your expertise and from your experience. And I've enjoyed the conversations you and I have had, and knew you'd be a great guest. And so tell the listeners a little more about who you are and then how you got in this commercial real estate business.
Sure. Well, it is kind of interesting. I grew up in a small town in northwest Alberta called Whitecourt, Alberta. Both my parents were teachers. My dad was a principal. My mom was a grade 1 teacher. And so I really didn't grow up with any kind of background on investing. And what was interesting is in my first year of university, I came back to Whitecourt and was building logging roads because that's what I would do to make extra money to go to university. And a friend of mine who was pretty successful in Whitecourt approached me and said, "Hey, Shane, I've got an investment opportunity." And it was just unbelievable returns. And, you know, when you started to do the math, you think in 1 or 2 years, I may not even have to go to university anymore. Well, he also presented it to my parents. My dad, who kind of had a fear of missing out, if you will, of this opportunity, went into his bank and remortgaged his house, took out $100,000. They had just paid off their home. They were kind of in their 50s at the time. And, you know, long story short, he lost everything. I lost everything I'd made that summer. But for a 19-year-old kid, that's not the end of the world, right? I mean, to bounce back, it sucked, obviously. However, watching my parents pay off their house for a second time was that really impacted me, if you will. And so I kind of went on a journey where for the next 4 years, all I did was work and save money, and that served me to a certain point. But then I started to see my best friend Jeff at the time. He was investing in real estate, and he owned a couple of houses, and I was a tenant in his house and living in his basement suite. And I don't want to get into the details, but essentially I was dating a girl that was a little bit older than me, and she was embarrassed. And so she broke up with me right before Christmas because she didn't want to tell her friends who were, you know, they had fancy houses in Calgary, that her boyfriend lived in a basement suite. And so I really took that as kind of a signal that just having a bunch of money in a safety deposit box wasn't going to really get me to where I wanted. And so within about 3 months, I bought my first house. Then I started to do some fixer-uppers. I started to get friends that would co-sign or lend me money, and we would do some joint ventures. And that's how I got into real estate. I was working at the city of Calgary as an appraiser and in urban land development. And I got approached from a friend who was at Sun Life Finance, and he brought me in to interview and basically learn the business of commercial finance. And so that's how I got into commercial real estate, more on the finance side. And I met my father-in-law, who brought me in and showed me how to invest in commercial real estate. So that's kind of a whole nother chapter. But from kind of birth to 28, that's the Coles Notes.
Wow. So really, you found a mentor.
Absolutely, yeah. I mean, in commercial real estate, the one thing I've found, and every time I talk to people, most times I talk to people, they're kind of intimidated, I guess, by commercial real estate because the numbers are bigger, the deals are larger, and they kind of wonder, how do you break into it? And I think, I'm not sure if you would agree with this, but in my experience, it is very relationship driven. And so when you know people and when they know you, and that's why I named my book Club Syndication, because it is a club. But it's not like it's off limits. It's just, once you understand the game of commercial real estate, you can essentially work your way into it. It's not easy, but I don't think anything worthwhile is easy. So
I agree with that. It's not easy, but yeah, or everybody would be doing it, right? Just like they say.
That's right.
So, give me a little more about exactly what you do right now in commercial real estate. What are you looking for? What's your, the perfect property right now that you're looking for?
So I would say, I don't know if there's ever a perfect property, but what I would say is the type of deals that I look at right now. I'll give you two examples that I just recently completed, one that I'm working on. So we bought 2.9 acres of industrial land near the airport in Calgary, and we bought it from a well-known developer. And what we did is we were able to get 4 months of due diligence. So we were able to really stretch out our due diligence, but that's kind of what happens when you're buying land in a soft market. So with that 4 months, I basically told my agents that brought me the deal, I said, I need 70% pre-sales and I'll close on the deal. And I don't want just garbage offers. I need them to have non-refundable money. And at that point, we'll close on the land and we'll go from there, type of thing. So we spent a tremendous amount of energy up front, and probably about $25,000 to $40,000 on marketing and getting architectural renderings and drawings to basically go out to the market and see what the market wanted. I would say that a lot of developers that I have experience with, what they do is they basically say, this is what we're building, and go sell it. But I took a different approach because I thought, I don't have the luxury of deep pockets and patience. I need to execute on this quickly. So I went to the market and said, what does the market want? And so what we did is we really narrowed it down to where we started to get a lot of interest once we shrunk up the size of the bays to about 1,350 square feet to 1,500. So that, for someone that maybe isn't familiar, that's kind of the average size of maybe a Subway or a Starbucks or something to that effect, maybe a little bit bigger. But they're industrial, so they'll be much taller. And once we offered that product to the market, we hit 70% pre-sales before we went unconditional, meaning we didn't have any money at risk except for our due diligence money. And we had, I'm trying to think if it was 30 or 60 days to close. Let's just say it was 30 days to close. By the end of the time that we closed, we had 100% sold out. And then really it was just a matter of development risk. So that was kind of one example. Another example I'm working on right now is where we're doing a retail development. And on this development, once again, it was an off-market deal, 1.6 acres. We found the land and we secured an anchor tenant in 90 days. And so an anchor tenant really is kind of like a major tenant that's going to come in and pay enough money that, if we do nothing else, we're still okay. So that's kind of how I look at my deals. Value add, lots of opportunity for upside. I mean, the deal by the airport was 34% to our investors and me as a developer. And I obviously did better than that, but my investors are very happy. And so the deal that we're working on right now, even if all we do is an anchor tenant, it'll be okay returns. But once we lease out the balance of the 10,000 square feet, it'll be extremely good for our investors.
Nice. So the 2.9 acres of land close to the airport. So that's a property you own now?
So, so that's a good question. Because they were industrial condos, we built 37,000 square feet over 24 individual condos. So think of it almost like industrial condos, no different than apartments that are condominiumized. Mm-hmm. And so we sold off all of that. And so me as an owner, my only obligation of the project now is I'm on the condo board, but we are 100% sold out. So technically I don't have any ownership aside from just being on the condo board.
Okay. And so, I know you are also active in the U.S. You're
Yes.
Looking at deals in the U.S. all the time. I can't remember how much you own here currently, but I'd love to know your thoughts about investing living in Canada, investing there versus investing in the U.S. and why you would choose one or the other, or if there's a difference to you.
Yeah, well, the U.S. going into the U.S. is a big it's a big difference. You could be kind of a big player in Canada and go into the US. And I'm not saying I'm a big player. I'm not. Like, I'm a small player in Canada. So going into the US, I'm even smaller. But you could be like a kind of a big fish here and going into the US and you're a complete unknown. What I would say, some of the things that I'm attracted to in the US, number one, I find the cap rates, especially on retail and industrial, to be much higher. And so my going in yield or returns kind of justify the added risk of going into a market that I don't live in. So that's kind of number one. Number two, when I'm looking at Phoenix, Dallas, and Houston, those are the kind of the three primary markets I look at. I mean, each one of those cities is kind of 5 to 6 million. Well, Calgary is 1 million. So Eastern or Western Canada might have 6 million people. I can go into one city and find as much product or more. And because I have about 8 years experience in those markets, I've got good relationships. So I guess it's really deal flow and opportunities. But there is certainly challenges to raising money and going into the US and having the cross-border taxes. That scares some Canadian investors. I get that. It's one of the reasons why I'm actually going into the US and talking to people down there who are interested in investing in some of these opportunities I come across.
Okay, so you've been investing in the U.S. I think you said for about 8 years, or you've had experience here for a number of years now.
Yes.
And so, but now you plan to come to the U.S. more often to help to raise more capital locally. Is that kind of your goal in doing that? You said.
Yeah. So I've got my plan is essentially twofold. One, I'll do developments in Canada because on a development project, it requires being there almost on a weekly basis. In the US, I'm looking at more value add opportunities, and I'm seeing specifically on industrial and retail. I love multifamily. I just feel that the multifamily world is very crowded right now, and it's just difficult unless you're getting the first phone call, which I'm not. I've got some brokers that I'm talking with in some of the cities that might show me some stuff off market. But I'm basically expanding my reach and network of investors that into the US. So people that are living in the US saying, "Hey, Shane, I want to invest in some of these deals. Do you find anything in some of these markets?" So I guess there's two approaches. One, where are the deals, and two, where's the money coming from? So between those two, I can be a little flexible.
Yeah.
Does that make sense?
Yeah, it does. It does. And it's different asset classes or different types of projects too. And it's unique, to hear how, okay, in this market or close to you, you're going to do developments and you can manage that because you're close. But in the US, you're going to have a different strategy just because of the distance and the cap rates or the prices and the value add components and not having to be on site all the time.
Yeah. I mean, the markets are so vastly different. I mean, I'll give you an example. I'm looking at a property right now in Houston and in Phoenix, and I can find retail properties sub $200 a square foot. And when I'm looking, so the one that I just put an offer on, that was at $347 a foot, and that was very low. The one that we're developing out right now will probably price out at over $600 a foot. And so just the markets are so different that I mean, one of the reasons I call myself the arbitrage architect is I'm always looking for places that there's an arbitrage or a big difference. Back in '08, when we went down into the US and Houston specifically, we were looking at Class A apartments that would trade for $240 to $250 a door in Calgary, if you could even build them, right? I mean, there's just beautiful, beautiful complexes. And even though the market in the US was going through, tremendous strain because of the financial crisis, I mean, I want to say we were 83 to 85 a door for Class A, beautiful walk-up apartments in very desirable locations. And I just said, like, there's no, I mean, A, you can't build it for this. And I'm just thinking like it can't be that much of a discount from Calgary down to Houston. And sure enough, kind of 7 years later, not even 6 years later, that same property that was purchased for 83 a door resold for 135 a door, something like that. So, and I'm sure it's probably even worth more today.
Wow. So now you're also coaching people in the commercial real estate business, correct?
Yes, that's right. Yes.
Yeah, I would love to know some of the most common issues or you find in people getting started in this business, and I guess clarify as well. Are your students going to be mostly in Canada, or are they in the U.S. as well?
So it's a good question. I have clients, mentees, whatever the proper term is, in both Canada and the US. And really, I would say the fundamentals are very similar in the sense that I kind of break my coaching into kind of three pillars: finding the deals, financing the deals, and then I call it fixing, just so there's three F's. But at the end of the day, it's really optimizing your deal. And so financing is certainly different from the US to Canada, but the rules and not the rules, I would say, the principles are very similar. And so I don't know if I'm answering your question, but you asked kind of what are some of the questions or
like the biggest pain points that you see across, as I like to ask people who are mentoring numerous people, just what are some of the common things that they have that are holding them back, and then how have you seen people break through that as well?
Yeah, I would say there's a couple of things. Number one would be like just a belief that they can do it, right? I mean, I think that what happens is, especially a lot of investors will come from either real estate, like residential real estate investing, and then trying to break into commercial, and they say, like, Shane, like, and these are guys that have done 100 deals to people that have never invested, and they're like, I want to do what you do, but I don't know how. Like, where do I even start? And I think a lot of people have a fear of sounding stupid, because if you've ever dealt with a commercial broker, and I was one, so this isn't anything negative, because they just have to be tough, right? And they can come across very abrupt. And so I think what happens sometimes is it's not like when you phone up a residential realtor and a residential realtor is kind of happy to take your call. And this is, I know I'm generalizing, but when you call up a commercial guy, like 9 times out of 10, you don't get them. You might get kicked down to a junior person. They're going to qualify you immediately. And so if you don't understand the language and the terminology, what happens is, I think guys or girls that are kind of trying to break into it get scared out very quickly. And so one of the key things I do is I explain to them, like, who are the players, like understanding the motivations of everybody involved is really important. And then once they have that kind of foundation of what's the game, what's the terminology, like just dropping in just some key terms. Like I had a client I'm working with where he started to sprinkle in some of the kind of key terms that I've taught him to use. And as soon as he did that, the agent on the other side really opened up and talked to him for 30 minutes. And he's like, I didn't understand anything he was saying, because he started to kind of go, and I said, well, that's okay. He trusts you, and and it is relationship. So now he thinks you guys are on the same board. I said, you're not going to learn this in 3 weeks, but now you can have conversations. He's going to start to send you deals. And so actually we looked at a deal that he's looking at right now. And so I think that's a really big, how do I find the properties? Well, you need to be able to talk to the brokers. Well, how do I talk to the brokers? So it's just kind of going back and all the way to the very beginning, which is, you can do this. Here's what you need to understand. It is relationships. How do you leverage me to talk to some of these people or whoever your coach is for that matter.
Oh, that's awesome. And because it is difficult, right? I mean, learning the lingo initially and being able to break through like you said, the belief that they can do it. And I hear that often. It's just so much mindset. And like you said, somebody that's done 100 deals, even though if they're just single family, but then they want to get into commercial and they feel, like they don't even know where to start. It surprises me when like I run into people like that and I'm surprised, like you've done this many deals. Yeah, I don't understand.
I agree.
So, but anyway, no, it's great, and that you can help them get through that tough time. But specifically for you, what's been the hardest part of the syndication journey?
I think one of the there's a couple of challenges. I would say the two challenges I run into are, and I would say that anybody that's really successful, like I see a ton of deal flow, but like deals that really make sense, right? Because the type of deals I'm looking at right now, I used to get quite excited about 5 years ago or 3 years ago, but now I've started to see just more lucrative opportunities. And so I like to see more and more of those. And so I like to see really asymmetric risk where I have high returns and very low risk. Before you and I got on the phone or onto this call, I was sharing with you some of the industrial properties I'm looking at right now. And I feel that as long as everything pans out, I think that will have very asymmetric risk to the upside. But then the second part of that is, how do I get enough time from the vendor? And so in Calgary, our market is soft. I would say that's probably the best way to put it. We're very oil and gas centric. When oil went from 110 a barrel down to 30 or 40, the market here, there was no fire sales, but what it did is it took a lot of investors out, where I've got more time now to be able to do my due diligence and prevent any kind of loss or risk.
Yeah.
So
that leads me right into, I try to ask, like, how are you preparing for this potential downturn that everybody's talking about?
So what I've learned over the past couple of downturns, I mean, I'm not that old, but I've been in the market since about 2004. So I've seen a few cycles, and then obviously my father-in-law, my mentor, he's been through many more. And so when we sit down and have conversations, and this is probably one of the real advantages I have, is to be able to kind of leverage someone that has 30 or 40 years experience. They've got a company that's been around for 90 years. And so we have these conversations, and a few kind of principles come up, and I've kind of put these into my non-negotiables, if you will. So preparing for quote unquote this downturn, I'm looking at like prime location properties. And the reason for that is, even in a soft market, you'll find that there's always a buyer for a property that's well located. At least that's been my experience. I'm always scared to say definitives, because you can always find an example when you can't. But
right.
At least from my experience, really good locations, proper debt service coverage. So I'm always making sure that I've got enough equity that that I'm not going to put myself, in a situation where I'm going to have to cash call investors or run out of equity, if you will. So making sure you've got long-term leases, proper financing, and frankly, investors that are going to be with you, right? I would say the majority of the investors that come into my deals, they're not putting their last $10,000 into a deal. I mean, just the fact that my friend would have allowed my parents to refinance their house and put 100G into it, I would never even allow an investor to do that in any of my deals. So I think that's something else, right? When you've got really good backing, then you've got more confidence too.
Yeah, I think that's building that relationship with your investors as well. That's some of the first conversations we're going to have is, tell me about your experience. Tell me,
absolutely,
where's this money coming from? Really,
Yeah.
May not be that direct, but I want to get to know you a little bit more. And have you done this before? Have you invested before? Anyway, I hate to hear that, but it sounds like it really pushed you in a good direction. But tell me, how have you recently increased your deal flow? Give me maybe a tip.
Well, so this tip won't encourage many people that are just starting out, but if you close on a deal, you see I mean, and until it happens, you don't realize it. But as I've started to do more and more, I see more and more, and then people hear about it. And certainly, I mean, one of the reasons that you and I are talking is because I've started to kind of put myself out there a little bit more on social media. I mean, in commercial real estate, it's very antiquated. It's an old boys club. And I mean, I know that there's women that invest in it, but I would say it is predominantly men. And you don't see a lot of people putting out either content or information, writing a book, doing a podcast, or even coming on a podcast. But the people that are doing it, I mean, you have to be known, right, in order for people to send you deals. And so now I'm seeing opportunities all over the place. And because commercial real estate is so specific to locations, I mean, I'm getting guys in Minneapolis, Seattle, Orlando, I mean, Nashville, all over the place that are saying, hey, I've got this opportunity. Or because usually they know of a property or an owner or a situation, but they don't know how to raise the money. And so they contact me, and because maybe they listen to whatever, some of my videos, they feel like there's more trust than if they were just because they don't even know where to start, right? And so that has been very eye-opening. I didn't expect that, actually. It's been pretty cool.
So what's a way that you have recently improved your business that we could apply to ours?
So I think one of the things that has really helped me in my business on the syndication side is really getting clear on what are my principles? Like, how do I invest? What do I believe in? And sharing that with people. I want to say a year ago, maybe a little more, I started to write posts on Facebook. And it doesn't sound like much now, but when I first started, I was scared. Like I mean, before I hit send, I was thinking about kind of 4 or 5 key people in the back of my mind, like my father-in-law, my own dad, some of the people that I had worked and done business with. And I'm thinking, like, what are they going to think? Because I'm sharing some very vulnerable things, right? And my first post wasn't that vulnerable, but I started to get more and more. It's actually a second book I released. And what I would say is it really connected me with people, number one. And number two, it helped me get clarity on what it is that I believed. And when you put something out, especially in writing or video or whatever it happens to be, I think what happens is like you have to live up to it. And so sometimes I would put something out. I mean, just before I came on this on your show today, I went on Facebook for like 2 or 3 minutes, and I just said, you know what? I think 100% is easier than 99%. And really what that meant was I'm giving up, by the time this airs, I'll have completed it, but I'm giving up basically sweets and ice cream and chocolate, because I'm just, that's my kryptonite, if you will, where I really like to kind of have sweets in the evenings. And so I said, you know what? I used to give myself a cheat day or a cheat meal, then it was a cheat day, and then pretty soon it was kind of like 4 days in a week, and I'm having treats too much, and it's showing on my midsection. So I thought, and it's funny, like, how does that apply to your business? It doesn't, except people now know who Shane is, that he's real. And like, I'll talk about my struggles, and I'll talk about how I accomplish things, and it just becomes more relatable, right? Like, maybe even just you hearing that, like, now you know something about me. Like, we could talk business all day, but now we're like, why I talk about my kids. And I mean, I'm sitting in my home office right now. Like, this isn't, I don't try to be anybody that I'm like. I guess one of the key things I've learned is if I tried to pretend to be someone I'm not, then I never know how I'm supposed to act, and that I think would just be way too much energy. So as long as I just am consistent, then people will either like you or not. But I don't know if that helps.
Yeah, no, it's good, and they relate to you as well. Yeah, I've heard that and experienced that. I mean, I've heard it from numerous people. Just when they start to be more transparent, even on social media, as difficult as like you said, as that can seem to be at first. Should I really put this out there? But more people can relate to you, then more people reach out. or connect with you and start to follow you more. But I've seen that, happen to numerous people and me personally as well. But what advice would you give for like the best advice for caring for investors so they continue to return?
Okay, so I just want to make sure. So is this for a passive investor or an active investor?
Yeah, passive investor. So like the way you would treat a passive investor. So they want to invest with you again.
Right. So a few things that I do in my deals is I'm very open book and transparent. I mean, when I send people, I'm at a stage now where sometimes I can just text guys and say, hey, here's the deal I'm working on. And, like they basically say, yeah, I'm in for whatever, 100, 200, 250. But that's because I've got 10 years of track record with them, right? So let's say I'm meeting with someone new. So I just met with a new doctor and we sat down and I said, hey, here are the deals and here's the risks. Like I almost go to the opposite end of being a salesperson in these deals because you don't need to sell people when you've got a good deal and a track record and opportunities. And I think it's really important that people understand what the risks are, how long it's going to take, the value that I bring into the deal. I've got my own money in, right? So some principles, like if I was a passive investor interviewing a partner, it would be, how much money are you putting in, right? And they don't have to put in the same amount as you because quite frankly, for me, for example, I don't put in as much as a lot of my investors, but I've also got 3 or 4 deals on the go. And it's as a percentage of my net worth, it's significant. And oh, by the way, I'm signing off on personal guarantees. So my house is on the line. So like I can't fail, I guess. Another thing is what I see new investors that are getting into commercial real estate, I find that it's almost like they don't want to miss out and they want to put all their money into a deal. Mm-hmm. And I tell guys, I'm like, you know what? There's going to be more opportunities. And if you pump all your savings into this one deal, you might miss out on the next one. And I'm not the only guy that's raising money. And like when I met with this last guy, he told me of another syndicator here in Calgary. I said, I don't even know why you're meeting with me. I said, like, those guys are like, they're like the Warren Buffetts and I'm like down here. So I'm not trying to pretend to be someone I'm not. I said, my deals might have more juice in them because I can afford, they're smaller. But I said, absolutely. Like those guys, I wouldn't put, if I had excess money, I would put money into their deals too. So it's just being really, I think, sincere and honest. And I think when a guy hears that wasn't like a ploy, right? Because I had no idea that he invested with them. And actually their CFO and I have an apartment building together. So I know what they do. Like it's a tight-knit community. I think you can ask around. I would follow smart money. When I say smart money, one of the things that, when I say smart money, so people that invest in my deals are, I would say about 30% of them are in the commercial real estate world. And so when I do a deal, I'm calling them saying, hey, what do you think of this? Because you're going to put your money into this. Like, do you believe these returns? Do you like this tenant? Do you like this location? Because I don't know everything, but I'm able to triangulate, right? I can talk to a mortgage broker. I can talk to a leasing agent. I can talk to a developer. I can talk to 15 people. And I can like take all that information and assess, is this a deal that I want to do? And so I think when people have too big of an ego and they're not prepared, like if they know everything, I'd be very worried, because the smartest guys in commercial real estate, they'll be the first to tell you. They'll listen more than they talk.
That's why they know so much, isn't it? Because they listen.
Absolutely.
Yeah. So what's the number one thing that's contributed to your success, Shane?
Oh, I wasn't prepared for that question. What's the number one thing? I'll say this, and this isn't BS. It's my wife, because quite frankly, the support that I have from her to be able to pursue this, if I didn't have that, there's no way I'd be able to. I mean, right now she's upstairs and she's taking care of our 3 little munchkins. And I can hear them every once in a while, and she tells them to be quiet. And sometimes I have to fly away and go look at properties. When I was doing that 1,150 acres out in Ontario, that's a 4-hour flight and a 2-hour drive. And I needed to be out there because the deal was not going the way it was supposed to. And we had a lot of money on the line. And so I essentially moved out there to make this deal happen. And my wife basically took care of our kids, and she knew that it was like, I had to do it. I didn't want to necessarily, but like my reputation and all of our family and friends' money was on the line. So I had no choice. And so if I had a wife that was like out partying or, like not supportive, I don't know how you would do it. And I've seen where other syndicators have kind of, I don't know what the right word is, maybe a home life that isn't quite as supportive. Very challenging. It's actually how I pick my partners. I don't want that drama in my life.
Love that. I can relate. I mean, like I could have said the exact same few sentences you just said. I've got 3 kids upstairs. My wife is up there holding down the fort, while I'm putting in all these hours, and traveling. Yeah. And so, no, I appreciate you saying that and giving her credit for that, because mine's the same way. Couldn't do it, without her. Yeah. That's for sure. No doubt about it. But, unfortunately, we're out of time, Shane. But tell us, though, before we go, how you like to give back.
So there's kind of 2 places that I contribute, if you will. And one is the YMCA, and the other one is Junior Achievers, where you can, because I'm very entrepreneurial. And so I like to be able to go into the grade 6 class and kind of mentor them, if you will, right? I mean, they've got a curriculum, but I'm still able to have conversations. And it's just unbelievable how young minds, I don't think we give them enough credit. I kind of went in there thinking that they weren't going to have, I didn't know what to expect, I guess, right? But I kind of went in with some preconceived beliefs, and they shocked me, and it was a very good eye opener for me. So definitely enjoy those kind of experiences, to kind of be around young people and that are kind of have that entrepreneurial spirit.
Wow. Thank you for sharing that. And thanks for giving back in that way. Tell the listeners how they can get in touch with you and learn more about you and your book.
Yeah, sure. So, I mean, the easiest is just to go to www.shanemelanson.com, and it's Melanson. And there you can get my book. I think on there you would just get the book free plus shipping. But if you just type in clubsyndication.com, you can go and get a free PDF copy. So either way, I sign my books because, I always think that maybe if I sell thousands of them, I won't have time to to sign them. But I always like to kind of sign them and send them off. And that's probably the easiest way to connect with me.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.